This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Tuesday, August 5th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn down $0.0125 at 385 3/4. September soybeans were up 4 3/4 at 980, and September Chicago wheat was down $0.0175 at 515. Yesterday afternoon, we got crop conditions. Corn stayed steady at 73%, good to excellent. That's against a 64% for the average, so still well above the average. Soybeans dropped 1 percentage point in the good to excellent category, 69%, and still 6 points above the average of 63%. Spring wheat lost a point, 48% in the good to excellent category, and 4 points below the average of 52%. Winter wheat harvest picked up 6% on the week, 86% harvested. That's close to in line with the average of 87%. Trade news this morning, trade deficit narrowed to $60 billion. So that was a good positive sign that we are making some progress relative to trade. And then looking at what we know here this morning, guys, still got good weather. Stone out with their estimates yesterday afternoon. Certainly got a lot of folks talking in the markets here. 188.1 for corn is what they're estimating, and beans 53.6. So I'm sure we've got some opinions on that. So to kick it off here this morning, Dustin, maybe share with us a few thoughts, and we'll throw it around the room.
Yeah, that's a big number, 188. I look back to some of those years where we had record trendline yields like 2014, 2016. And, there were a lot of people that said we could never reach that. I think at the time it was 166. We've never traded that before. And then we just blew past it on a really good growing season. So I definitely don't want to scoff and say that that's not possible. Like, it's definitely within the realm of the math of above trendline beats. It's been a number of years since we've had it. So I think recency bias suggests that people want to, downplay those numbers as not possible. I definitely don't want to say that because it's very well within the realm of what can happen. It still needs to finish out. We have a slightly drier forecast, slightly warmer than expected. We've got some pollination issues. So I'm certainly not in the camp that I'm expecting a 188 either. I would say my own personal belief is we're going to be above trend. I just don't know. I don't know if I expect a major beat on the chart. What's really interesting, and we've been talking about this a lot in the letter, is the carries have expanded as one would expect. Pipeline carryout projected on the WASDE report, we're within that range of a 1 month's corn supply to end the season. Yet you've got interior corn basis levels not really suggesting pipeline carryout, especially at these lower prices and these types of carries. Big carries in corn, even bigger carries for soybeans. So the market has I don't know if it's just the buyers and sellers have matched up very nicely, or we've miscalculated stocks. Anything really could go here. Right? We got the funds short, which they tend to stay short at the very front end of the market. But I would remind everyone that like August has been in the last 10 years has been an extremely weak month. It's the end of a growing season. It's been a relatively new phenomenon that we're doing everything we can not to price corn at the commercial level, right? Basis only contracts, DP. I think last year was a big one where we got to, the end of August and things really tailed off to a hard bottom low toward first notice day at the end of August. I think that was a lot of that was a carry in from the 2023 season of contracts that just hadn't been priced yet. Is that possible that that's happened again this year? Very much possible. But I would just kind of remind everyone to keep that balance, because you're getting into these territories. Like if we get to a sub $4 corn price, a lot of the people that we work with have bought higher end insurance policies. They have a high probability that they're deep in the money on those insurance policies, depending on the county yields. As we're going to see on this next WASDE report, the projected marketing year average is probably going to be deep into the money on PLC payments. And even if you selected Ark County this year, you're going to get the higher of the two, either Ark County or PLC. That's going to be automatically calculated for you. That was the terminology put into this recent reconciliation bill because they changed it after the election date. So what does all this mean? It means that for a lot of growers, not every grower, but for a lot of growers, they'll actually do better the lower the price goes. And it's a very obtuse concept to kind of be, I wouldn't say cheering the market on, but knowing you're at least covered if the market keeps dropping. I think that's we call that a comparative advantage that you have to play yourself against. You don't want to panic and say, well, StoneX says we're getting a 188 yield, so we have to sell it because it's going lower. That very well could be a correct yield, and we might go lower. But at the off chance that that's not, you don't want to have sold everything at below cost production and find out later on that you're not going to get those crop insurance payments. You're not going to get the PLC payments, because we've gone through that before. We've seen this happen in 2020 going into 2021. It's very, very similar setup as far as like where the incentives are for price action.
Yeah, very good. Justin, I thought it was interesting. A lot of volume on the open last night, but certainly we didn't, corn didn't fall apart per se based on what it saw in that 188. So what are your thoughts?
Yeah, I mean, we're obviously have already been talking a lot about big yields. So it's not like, we were guessing at 179, it came out 188, so there's already been plenty of 185, 186 estimates out there. This was kind of one of the higher ones that are the highest one I've seen. To Dustin's point, yeah, I mean, you look at some of those years where you're 5% above trend. I think 1994 might have been the record at like 13% above trend, right? So like 5% above trend is like a 190, right? So, I mean, that's certainly in the realm of, really good years that we've had. And to Dustin's point, I think we've talked about a lot is see how we finish. I'm more excited about, StoneX customer surveys. I'm actually more excited about the groups that are going to be going out there and actually pulling back years, doing kernel counts. Then I'll have a little more confidence on those local areas that, they've been doing it 10 plus years, the same areas, the same kind of fields. So they kind of know what they're looking at. And that's all stuff that we're going to get the month of August. And, last year we bottomed at, I think 360 on the September contract going into first notice day, so we're 25 cents higher than there right now. So certainly can continue to break through the end of the month if the weather continues to hold out to be really good. And, it's probably a little encouraging that we're only down a penny and a half with a 188 print. So I think that kind of tells you the kind of numbers we're already trading. So that being said, I do think they're typically going to get the right direction for the August report. So I think you'd want to bet on the yield coming up on the next WASDE report. But other than that, I think it's, September is really the first month that you start getting actual data, not just survey data, or, I think it's mostly survey and satellite stuff now for the August report. And then by September, you're actually, they're weighing ears and starting to get more of that objective yield data. So August will probably give us the direction, but it's, really September, October when you actually get in there and get the real yields. But that's all I got to say, really. It's obviously we're trading those kind of numbers, or we're in the, in that zone. Yeah,
you're still non-threatening weather for beans. I mean, nothing you see there.
No, I think there's plenty of moisture, right? Beans are, like we always talk about, tricky. If you turn off the water, it can make a big difference in 2 weeks. I think, and to corn too. If you don't finish off strong, like last year, I think Stone was 182.5 maybe on this survey, right? So they had a relatively high number last year too, and it seems like the last couple years, Is that right?
182.3 was 24. Yeah.
Yep.
And then the final was 179.3 for the USDA.
Yeah. I mean, if it certainly feel
Yeah.
like there was a little more
Right.
corn, but
Yeah.
but yeah, just like those years like we talked about, you just didn't finish off great, So I think you took 20, 30 bushel off the high end of some of these really good corn producing areas, like in Illinois, for example, and Iowa. So potential's there. Let's see if we can hold on to it to the end. That's why it's so hard to get those 5% above trend years. That's why there's only a few, because you just have to have such good weather all the way to the end to really take that next level over the top. So.
Ben, anything to add before we move on to cattle? You're muted, Ben.
From a technical perspective, we negated the sweeping reversal in corn. Hate to see that, but by the same token, they haven't gotten all over it yet. So it's just a really, death by 1,000 cuts, slow grind trade. Very low volatility and everything, which you have to figure out how you want to work around that. I think that if you're objective and you look at everything that you have on, lower prices cannot necessarily be a bad thing per kind of how Justin let in. So we'll just see how it shakes out. We've had a summer of 2 weeks out weather that looks threatening, that winds up cooler and wetter. You wonder if that pattern is going to change per the current forecast or not. Kind of been, again, conditioned for failure in these markets. So we'll see how it plays out.
Yeah, I wanted to add one more thing too on this, like just the gravity of like the difference from the bean spreads, like Sep to July bean spreads at 81 cents carry versus Sep to July corn at 55 cents carry. At this type of a bean acreage number, at this type of RVO guidance and huge crush margins all the way out for the next year, one small trade deal with China, or even just an accord, like there's going to be high competition between those. And we don't really, I don't have as much confidence to say that the StoneX bean yield's correct, right? Like I'd be more closer to trend line, just because it's so hard to predict that. So, and then yet, meanwhile, Justin pointed this out earlier, like if we settle here, this is going to be a new high for the move on the beans divided by corn ratio, 2.46 to 1. So corn's showing a lot of negativity because we have, this really good weather. And I think everyone's a bit more convinced that the corn yield's at least going to be good. And we have a huge corn acreage number. So and we have all the incentives to go back towards beans in 2026 out of natural rotation and domestic demand projections. So why is the ratio starting to make new highs, yet bean spreads are screaming extreme abundance? That's kind of the question, I think, that doesn't really make a lot of sense right now. So bean spreads, they're getting quite wide. I'd be curious to see how we finish out.
Very good. Justin, anything to add to that?
No, I just think that, these are all good, so in one sense, it kind of, I said, one way to look at it doesn't kind of make sense because the forward demand could be really good and we could be, needing more bean acres out forward. But nearby, there's just, the market's, sensing that, like that new trend of farmers dumping more beans at harvest and storing corn just because to free up more money and not have to deal with beans. So it could just be a combination of things. But yeah, you look at, 220 plus crush margins, that's not including cash basis levels or anything like that. It's kind of interesting. So, maybe it means that, July beans are too expensive, for example, after the carry. If you have a really big bean yield, like maybe selling July beans is the right thing to do if you can store it. So it's definitely paying you more interest to store than the corn market is, but it seems like the preference certainly has been to sell beans off the combine, not corn. So, and right now with trade, with the 90-day pause again with China, is there just not the commercial or the other side willing to own the beans right now, not knowing what that export picture is going to look like or what what the future looks like. So
Very good. Real quick here, Rye. Two-sided trade yesterday in cattle. It was nice to see a strong finish, and then October hogs now leading the way as we go higher here. So, what are your thoughts as we start the day?
Yeah, I haven't seen too much as far as new fundamental action on the cattle side of the market. But yeah, it was two-sided. Just kind of feels like everybody's trying to get their bearings on what cash is going to do here. But you had beef market up a little bit here yesterday. You had both choice and select up just over $1 here. So I think overall these tighter slaughter numbers are still going to likely support the beef market for right now. Tyson had their earnings call yesterday and just said that there's still quite a few challenges for their beef sector. In the next for the entire fiscal 2025, they're still projecting a $375 million loss, but that's not as big as it was. So you could take some cash implications from that. Maybe just at least what they're thinking here down the road, that, cash could start to come down at some point, maybe help them out a little bit, but still not to a point that's really going to help their margins so much. So we're kind of at an inflection point, I think, in that regard, but we'll see how that goes. At this point, no cash trade has been posted, and just expect bids and offers maybe start to roll out kind of midweek here. So it just kind of feels like follow the trend, at least at this point. In the hog side of things, yeah, we new highs for the move there, but still kind of stuck in this range right now. You've got the discount kind of priced into October, and I think just generally you're in that kind of seasonal time frame where you're at the tail end of the grilling season, and I think just a lot more of the day-to-day momentum is really going to be brought forth by carcass. Carcass was up 85, belly's up 174, so I think that's really where the focus is going to be right now, just with the market projecting this fall in cash prices between now and into the fall.
Very good. Appreciate the update there. We just came into the open. We got September corn now down 1.5 pennies, 385.5. September beans are up 3.5 at 978 3/4. And September Chicago wheat is down 2 1/4 at 514.5. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.